Hello everyone, welcome to Dubai Property Show. My name is Yasmin Taimouri. I've been in Dubai's real estate and business market for more than 20 years. In this show, we are discussing everything about investment, real estate, risk, opportunities, and the decisions that can make or cost you millions. Let's get started. What I've learned over the past years is that buying property in Dubai is so easy, but buying right property with a smart and right financial strategy is what creates wealth for you. I've seen so many investors who came to Dubai who have purchased excellent and wonderful properties, but they have lost their entire investment. Why? Because they mostly focused on their own assumption of their financial situation and the property itself. That's why they lost lots of money. Whether you are a first-time property buyer or you are an overseas investor or you are an investor, you want to expand your portfolio or you want to know about Dubai's mortgage rules and regulation, this episode is yours. To help me navigate the topic, I'm delighted to be joined by one of the UAE's leading mortgage experts, Sudeep Jain from Ask Financing Broker. We are going to discuss everything about what every investor has to know about mortgage, from mortgaging your ready property, financing your off-plan property, overseas rules and regulation to getting mortgage, refinancing, equity release, or any bad decision that can cost you millions of dirham or your entire investments. I have loads of questions and just a little time. Let's jump into the conversation with Sudeep. Welcome, Sudeep.
Thank you, Yasmin, for having me. Sudeep Jain basically is an individual who started this company along with a partner 10 years back. And we primarily focus on arranging financing for individuals. I'm an ex-banker, so I've worked with Citibank. I've worked with ADCB in Dubai before starting this company. In terms of qualifications, I'm a certified public accountant from America and a master's in finance.
Tell me, who is a finance broker? Like, why people, they have to come to you to have a consultation with you rather than going directly to the bank?
So I'll explain this to you with a simple example. People can just go and basically approach someone and buy a property, but they require a specialized individual who's a real estate broker who can show them different properties on the basis of their budgets, on the basis of the area, the locations, and all those criterias. A financing broker or a mortgage broker offers exactly the same value. So as an individual, you have access to one bank, maybe two banks, maybe three banks, where you could be having an account. An independent mortgage broker or a finance broker can basically give you access to 20 different banks. So it could tell you criteria of 20 different banks. It could tell you which banks are offering what interest rates, which bank is best suitable for your financial profile. And hence, you get an independent professional advice. And that is why everyone should approach a financing broker or a mortgage broker in Dubai before they take a loan.
It means that you are somewhere between real estate brokers and banks and investors. Like you're connecting all these three together.
Absolutely. Yeah? This is what we end up doing. We give them the right advice that, on the basis of a profile of the individual, which could be salaried or self-employed or a non-resident. We know which bank is offering what percentage of loan to values. We know how to, basically look at their debt burden ratios and give them the sound professional advice that, after looking at all these things, approach this XYZ bank. And we approach this XYZ bank, get them a pre-approval and help them in closing the entire deal from pre-approval to a final approval and a proper transfer as well.
Did you have any client that in between, like they got the very bad advice from the real estate broker agent or real estate agent or from bank?
So a banker basically is just restricted to selling his products, right? So, you approach a bank, they would tell you what their product is offered or what their offering is. The moment you move to a real estate broker, the real estate broker will again, be able to offer 2 or 3 different banks wherever the real estate broker might have connections with or contacts with. The moment you come to us, we will give you 20 or 22 different banks in the UAE. depending upon your financial profile, depending upon your financial criteria, depending upon your income levels, depending upon your existing liabilities.
Okay.
All these things basically impact your borrowing profile. And we will then be able to approach the right bank and get you the best possible deal which is available.
Now tell me how Dubai mortgage market, has been evolved over the past 20 years. Because I remember first when I heard about mortgage in Dubai, banks they used to give 105% or 100% of the value of the property to the brokers. What did you see have been changed over the past 20 years?
See, it's a complete difference of day and night. Dubai's mortgage market 20 years back was heavily reliant on cash, right? So people were just coming with lots of money in rucksacks, and just buying properties, mortgaging them to a bank, because no one was aware of what is happening because there were no regulations. The central bank basically has introduced robust regulations, complete AML compliance at this point of time, strict debt burden ratios, strict loan to value ratios. So the market has completely evolved, in the last 20 years. In fact, you cannot even compare what it was 20 years before to what it is right now.
It gets better, it gets worse, it gets easier or harder?
It is far better, much more easier now to take a loan than what it was 20 years back for an individual.
It's like, in my opinion, what I see right now, they are really protecting banks, investors, because I've seen so many investors like before, 20 years ago, because they see the potential, they keep investing. Family, they gather together, groups, and they invested without having proper financial strategy.
See, the way I look at the things is that the moment you take a loan of 100% against your property, and if tomorrow there is a situation of a war or a COVID or anything else wherein the property values go down, the moment you have a 100% loan, your capital itself gets eroded out. The reason of central bank putting the loan to values at 80% or 70% or 60%, depending upon an individual's criteria, is purely because if the market values were to drop, it would end up protecting the bank. It would end up protecting you as an investor as well.
Exactly.
Because you have not borrowed 100% against your property.
Yes.
So that's the reason.
That's wonderful. Like what I've seen in Dubai, everything was reaction to what's happening all around the world, and that was so great. Actually, every time that something happened, definitely so many things happened, like COVID, no one expected it. After that, so many rules and regulation has been changed for better. Any time that this kind of crisis happened in Dubai went one level, two level higher. And that was so wonderful.
See, we all learn from our past mistakes.
Exactly.
So it was highly speculative at that point of time. From there, it has become completely regulated at this point of time.
Yeah.
And even with the situation that we are in right now, I'm sure the central bank will come up with some better regulations to regulate this market in a much better way.
Exactly. And the good thing is that their reaction is so fast. What difference Dubai from other countries or other cities, that they are reacting so fast. And they're trying to come up with new policy or regulation that it's affect everyone immediately. And
absolutely. In fact, I would like to say that the rulers here, the central bank here, they are not reactive at all. They are completely proactive.
Exactly.
So they know what is expected to happen and how to tackle that, and the regulations are built as per that.
Wonderful. Tell me, what is the biggest mistakes that people they are making when they are applying for finance or mortgage?
The biggest mistake that they end up making is, they think that the moment they get the pre-approval, it's their final approval, which is not the case. Pre-approval is just the starting point. To go from pre-approval to the final approval, it takes, in terms of time, of about 10 to 15 days. But a lot of things are being checked in the background as well.
Okay.
So the biggest mistake is, people think that pre-approval is the final approval and, the loan is done. Pre-approval is just the starting point. They would end up, spending some amount of money after the pre-approval comes, thinking that, it won't be required for the final approval, which is not the case. So this is the single biggest mistake. If your financial profile changes, if the bank sees large cash deposits into your account, if the bank sees large cash withdrawals from your account, they may not, convert the pre-approval to a final approval.
Oh,
A lot of people also forget the part that they also require additional 4% for Dubai Land Department fees, additional 2% for their real estate fees, their real estate brokerage fees, and maybe an additional 1% for the bank fees. So, they do not take into account the 7-8% extra that they will have to pay.
this is what I
Which
have
is
to just
only
write it here, write it down to ask you that the fees that no one knows about it. I will come
yes.
back to that. Okay, so
So this is the single biggest block that treating the mortgage pre-approval like a final approval.
let's say now, like it's happened to me that I had a client who said that, okay, I want this property. I have a pre-approval for this amount. Keep this property for me. And it took like 3 months, but the situation has been changed. The seller couldn't sell the property anymore. But the buyer also couldn't get the final approval. It happened, yeah?
It has happened multiple times. So the problem that happens is the moment a Form F is signed between a buyer and a seller, the property gets blocked in the land department.
Okay.
So the seller cannot sell this property to anyone else. Now the buyer is going through his own financial checks at the bank from where he has got a pre-approval. Now there could have been multiple things that could have delayed this pre-approval process to convert it into a final approval. One could be that there could be multiple transactions coming into his bank statements which the bank is trying to verify but he's unable to give a proof of. There could be other factors like valuation. So for example, the valuation may have come a little lower than what he was actually buying for.
Okay.
And thereby he has to pay now more money to secure the same amount of property, the same property, because now his down payment increases because the value has come down. So there could be a lot of factors that may impact this.
Oh, okay. So we have to be so careful about that.
Yes.
When we are selling our property with pre-approved mortgage buyer.
So remember always that pre-approval is not the disbursement of the loan. Pre-approval is just one process. From pre-approval, we go to valuation. From valuation, we go to final approval. From final approval, we go to disbursement. At any point of time, the bank may decide, I do not want to fund this particular individual, and they may not move ahead with this particular loan.
But from this pre-approval to the final one, do we have to go with certain property and then we get the final approval for that property, or no? We can get the final approval with any property and then we go for the...
So typically, the way I advise my clients is, go ahead with the maximum pre-approval amount, so that what is the maximum amount of loan that you are eligible to take. So let's say you have a loan pre-approval of 1.6 million dirhams on the basis of your current salary, which could be at 80% loan to values.
Okay.
Which means you can go ahead and purchase a property of 2 million dirhams, take a loan of 1.6 million dirhams, which is 80% of 2 million dirhams, and end up buying any property. So pre-approval is just the starting step. Different banks gives you different time to basically submit the Form F. So it could be anything from 30 days to 45 days to 60 days with some banks.
Okay.
So your pre-approval has got that amount of time to be converted to a final approval and then a disbursement.
If in these 35 days or let's say 60 days, they couldn't find the right property. So again, they have to start from the beginning?
We have to revalidate the pre-approval, which means we will have to submit your income documents again to the bank. Again, the bank will run its own checks and then reissue a pre-approval letter to you. If your financial situation changes at that point of time, the bank has the right to, not issue a pre-approval again or cancel the existing pre-approval as well.
Oh, how far in advance everyone have to go ahead and get the pre-approval, or just go through the process of starting getting finance?
So, I would suggest you start planning maybe a year before. So let's say you want to decide to you want to end up buying a property at the end of 2026 or in the middle of 2027.
Okay.
I would suggest to start right now, which is typically 6 to 8 months before. Start looking at your bank statements. Stop erratic spending on your bank statements.
Okay.
Make sure that your bank statements are proper. You're getting the money the right way. Okay. The money which is going out is for proper channels of spending. Yeah, I mean, 6 months gives you the best time for, to basically make sure that your statements are in order for the bank to, look at your financial statements.
6 months,
Six
six to
months,
eight months.
six
You
to eight
have
months.
to
Yes, yes.
go do it in advance.
Yeah, this is the only way that, you can present a flawless risk profile to a bank.
When it comes to evaluation, tell me what type of habits will affect the mortgage capacity of the investors.
The first and the foremost thing that any credit underwriter would want to look at is, how much money is coming into your bank account and how much are you saving. Are you spending the entire amount of money that you are earning? The moment they see this kind of a pattern, it's a big red flag for them to, give a loan to that particular individual. So someone who earns a 20,000 dirhams and, spends 18,000 dirhams out of that would be a big no-no for a bank, versus someone, who earns the 20,000 dirhams, saves 10,000 dirhams for his future and spends the 8,000 dirhams. So saving is the first and foremost important thing that you should be looking at into. Second thing, especially in Dubai, what I've seen is, people get into a credit card debt. The moment they start earning, they end up, taking a credit card out. They spend more than what they earn,
Okay.
and then the credit card becomes a big of an issue because they're unable to pay that in full at the end of the month,
Okay.
which thereby impacts their credit bureau report. Now, the Al Ittihad Credit Bureau is a very big part of lending system here. All banks look into it, and if your credit profile is bad, you will not get a loan. Or if your credit score is poor, you will not get a
Like
loan.
even if I have a credit card, at the end of each month, I will pay the minimum amount of the requirement.
No. So, for example, you have a credit card and you pay the minimum amount, not the full amount.
Okay.
It gets recorded in your credit bureau report.
Okay.
It gets recorded as a fact that, here is an individual who's earning maybe 20,000 dirhams, having a credit card of 100,000 dirhams outstanding at this point of time, but is probably only paying 1,000 dirhams every month.
Okay.
So, thereby it impacts your credit score in a very, very negative way. You may not even get a loan out.
When it comes to credit card, you were talking about credit card. Let me ask you this question: how having credit card and other loan from other banks can really affect your borrowing capacity?
It completely impacts your borrowing capacity. So central bank typically in the UAE looks at your income with a debt burden of 50%. So for someone who has a salary of 20,000 dirhams, 110,000 is completely removed out and kept in a separate bucket altogether. Now we only have the other 10,000, which is with us. Now let's say if you've got a credit card of 50,000 dirhams right now, even if it's not used, that knocks off. I mean, so typically the way the bank calculates your spending capacity or your borrowing capacity here is by removing the 5% of your credit limit out. So 2,500 dirhams of the 50,000 dirhams is basically again removed out from your income. So typically you can only borrow with a paying capacity of 7,500 dirhams, which is the remaining amount at this point of time. So we strongly advise people, if you're not using credit cards, cancel them completely, or don't have them in the first place.
Okay. You were talking about 20,000 dirham salary. Tell me, what is the minimum salary that everyone can have it, and they just come to you and say that I want to apply for a mortgage for their
So the minimum
house?
salary requirement till about before the war was about 12,000 dirhams. It has now been increased to 15,000 dirhams.
This is the minimum
This is the
salary.
minimum salary that any bank would look at it right now to to get a loan. I mean to give a loan
And for how long they have to have this salary? I mean,
for a minimum period of 6 months.
6 months.
Yes.
Like if I join the company now and for the past 6-7 months, I get the salary for 15,000 dirham, I am eligible to get the loan
You are
for
eligible.
property.
Yes, you are eligible to get a loan. Now there are some restricted segments at this point of time because of the current situation that we are in right now. So it all depends on what company you're employed with, how
Okay.
long have you been employed with, what was your prior experience if it is in a negative sector at this point of time.
Okay.
So bank looks at all those things before they decide to fund you at this point of time.
You're talking about negative sectors. What are those negative sectors you mean?
Real estate brokers at this point of time, the hospitality industry at this point of time, the tourism industry at this point of time.
Because there is no business for them right now.
Anything
so they
that has
are
got impacted with the current situation is
Okay.
has been put up by the bank into a negative list at this point of time. So
Okay.
it's not that they're not looking at these sectors. It's just that they're looking at these sectors with a bit of a caution at this point of time.
Okay.
So real estate brokers, real estate developers, people in hospitality, people in tourism, insurance brokers, mortgage brokers, financing brokers like us.
Okay.
All of this is into a negative sector at this point of time.
Okay. And the company that they are working with is really important. That
Yes,
how their
absolutely.
background, how big they are, and all these
Yes.
things is.
So for example, if my salary in a real estate brokerage company could be, let's say, 40,000 dirhams, vis-a-vis you working with Dubai Refreshments, Pepsi, having a salary of 40,000 dirhams,
Okay.
you would have more chances of an approval than me, purely because of the industry in which you're operating at this point of time.
Okay. The company that you're working with also has a big impact on the capacity of the mortgage that or
Absolutely.
eligibility of the mortgage that you can get or no. This mortgage that we are talking about is only for the ready properties or off-plan properties also they are
But till
eligible.
till about 3 months back, it used to be only for ready properties.
Okay.
But right now, banks have started funding for off-plan properties as well, with specific criterias. But Emirates NBD has come out right now. FAB is there right now. CBD is there right now,
Okay.
funding for off-plan properties as well. There are certain criterias, which needs to be satisfied at the client level, at the developer level. So the moment you qualify into that, you're eligible to take an off-plan property mortgage as well.
When you're talking about off-plan properties, it means all type of off-plan properties, anything that we have in Dubai.
No, so it is currently only with select developers, which are pre-approved by the bank, which includes developers like Emar, Nakhil, Miras, Aldar, Omniat, Ellington, maybe a couple of them more. The list keeps on increasing every time they add a developer in this. But at this point of time, it's restricted to 8-10 different developers right now.
You have to be so careful. You can get loan or mortgage for off-plan properties, but selected developers. You have to make sure that who is the developer of the
Who is the
project.
developer? How much is your project completed?
Okay.
And how much have you paid? These are the three criteria that the banks look at it before giving you a pre-approval and thereby converting it to a final approval.
That's the exact point that why you have to go to the mortgage broker rather than bank directly, or you ask your real estate broker, because everyone they are specialized in
Absolutely.
like certain part of this process. When we are talking about off-plan property, you know that right now most of the off-plan properties they have a very good payment plan, like
Correct.
20/80, 30/70, like 30% or 20% you will pay till handover time, and then the rest you will pay on completion. Even some of the developers they have 3 to 4 years after
Post-handover
post
payment plans.
handover payment plan.
Yes.
Why they have to apply for the mortgage rather than going with the developer directly?
See, the thing that we have seen so far is that people buy a property thinking that we are on a payment plan of, let's say, 40 60 70 30 30 70, whatever it is, with a different
Yeah.
developers, different payment
Yeah.
plans, thinking that whenever property will get completed, they will be taking a financing for the unpaid amount at that point of time. Now that could be after 3 years from now, 4 years from now, 5 years from now, depending upon developer and the project in which they are into. But things change. Right now, interest rates go up and down. Your jobs may shift from one company to another company. You may not be having a job at the time when the property is coming for an handover. The market could be in a war-like situation, which we have seen 2 months back.
Yeah, so
There
many
could be a
unexpected could
COVID. There could be a
happen.
COVID-like
Yeah.
situation. So you cannot depend on the fact that I will look after my financing after 3 years from now. You have to plan it in advance and thereby take an advice of a mortgage broker or a financing broker and make sure that whatever you end up buying right now, you will be able to pay your full amount of money. Because if you're unable to secure a mortgage for the balance 40 or 50%, your entire equity may just go away, because the developer will not wait for you to arrange the money. They will they'll give you a certain amount of time. If you're unable to fund for it, they will take all the money and sell the property to someone else.
Okay. Yeah, that's happened.
It has happened to multiple people. It has happened to someone I know, whom we advised not to buy because of looking at his financial situation at that point of time, but he still ended up buying a property and he was not able to take a loan. and he did not take help of a financing broker. He lost his property completely.
That's it. These are the bad decisions that they are making. It could cost them their entire investments. That is what we were
Yes,
talking about.
complete
Yeah.
equity loss.
Only people who are residents in Dubai are eligible to get the mortgage for their property, or overseas investors also they are
So
eligible.
overseas investors are also eligible. Their loan to values are lesser as compared to residents of the UAE.
Okay.
So it used to be 60% till the war, but post the war it has been reduced to 50%. So me being an Indian having income in India is still eligible to buy a property in Dubai and take a loan of 50% of the sale purchase value or my valuation, whichever is less.
Okay.
And provided that my bank statements from my home country, in this case India, are able to support the repayments.
Okay.
So
As of now, like we are recording this episode on June 2026. As of now, based on the current rules and regulation, overseas investors they can have 50% mortgage
yes,
based on their financial turnover in their own country.
yes, based on their personal bank statements in their own country or their business bank statements in their own country, the minimum requirement is that we look at the last 3 months or 6 months bank statements.
Okay.
The minimum credit turnover in the account should be more than 40,000 dirhams equivalent in their local home currency, and there should be a minimum average balance of 40,000 dirhams in their local home currency.
What I see in the market, like two different approach. One of them, they said that, okay, you have to come to Dubai, take golden visa or apply for golden visa or just get the investment visa, 2 years, 3 years visa, and then apply for a mortgage and then buy a property. Or some people they said, okay, I got the advice from mortgage broker that you have to cancel your golden visa and then apply for the mortgage. Which one is correct? Which approach they have to go for?
See, both approaches are correct. I would not say one is right or one is wrong. It all depends on the individual's income at that point of time, his own situation at that point of time.
Okay.
So we have seen people, whom we have advised
Okay.
that when they are buying a property, they would apply for a golden visa on the basis of the property that they've bought, and we have been able to secure a loan for them on the basis of the property that they've bought and the golden visa.
Okay.
We have also seen people who already have a golden visa, not on the basis of property, but on the basis of certain other benefits that they have, and they have cancelled their visas, ended up buying a property, and then taken a golden visa again.
Oh,
So
okay.
it completely depends on the situation at that point of time.
Okay, then everyone they have a different situation
Absolutely.
and they like both approach are correct.
So what may work for you may not work for me, and what may work for me may not work for you.
Yeah, that's why that like if your cousin, if your brother, sister, or anyone went through one way to get the mortgage or buy property in Dubai, this might not work for you.
Absolutely.
Okay, it can cost you your entire investment. So you have to be
Yes.
so careful about what is correct for you and what is the right plan and right strategy for you. Now let's talk about it that I have a property in Dubai. I need money. Like I want to make equity release, or I want to get some mortgage from the bank based on the property that I have, and I use this equity for buying second property or even for the personal use. How does it work?
So central banks here do not allow equity to be used for personal use. So the moment you have a property which is ready right now, which could be on rentals or which could be as an investment for yourself,
Okay.
which could be for your personal use or could be as an investment for yourself, you can always take out equity that can be used to purchase another property, which could be your second or third property.
Okay.
Or you could also look at financing or funding your off-plan property payments. So both of them are very much possible, and it's something that people should do it because the interest rates are very very less in Dubai as compared to the kind of returns that your properties generate. So there's a very very good arbitrage opportunity which is there.
You mean that, for example, let's say I have a debt and I have to pay and I need cash for that debt.
Yes.
So I cannot get mortgage on my property, existing property, and get cash from the bank to use it for that personal debt.
No. So that is not allowed by the
This is
central
what
bank.
every countries they are doing.
Yes,
Like,
but this is not allowed by the central bank here.
okay.
Because what they believe is the fact that if you're taking out money from real estate, it should be invested back into real estate in the UAE itself.
That is a very important point, that when everyone they are talking about equity release in Dubai is not like other countries.
Yes.
If you are taking mortgage from your existing property, you have to use this fund for buying another property.
Another property in the UAE, it could be ready property, it could be off plan, but it has to be again real estate investment.
So for any cash flow, or if you need any money, don't count on your existing property
Real
in
estate
Dubai.
properties.
You can only sell your property.
You can
That's
only
the
sell your
way.
property and settle your personal debts.
Okay. What do buyers mostly get in conflict between real estate agent, banks, and mortgage broker?
See, we have to understand this fact that everyone is looking at the market from their own perspective.
Yeah.
Now, a real estate broker would be looking at looking at from a real estate sale perspective,
Yes.
and would want to basically close the sale as quick as possible, and thereby oversimplifying things. The banker would be looking at things from his bank perspective or his bank product perspective. The moment you go to a mortgage or a financing broker, they look at it from a perspective of 25 different banks or 22 different banks in the UAE.
Okay.
Now, on the basis of the income that you have, on the basis of your current profile, we are able to guide you to the right bank,
Okay.
thereby saving massive amount of time for yourself and a lot of interest cost.
The interest cost might vary from if they come to you or they go to the bank.
So specifically, I mean, I would not say if you were to also approach the same bank which we are approaching, the interest cost would be the same. But again, what I mean is, if your access would be limited to 1, 2, or 3 different banks,
Okay.
and you would be knowing the interest cost of these 3 different banks. My access would be for 25 different banks. So the moment you approach me, you would save your time. I might get you another bank at a cheaper interest rate.
Is it possible that someone they go to the bank directly, they got refused? They said that you are not eligible to get mortgage. They get this paper with them and they come to you and you get the approval for them. It happened.
It has happened, yes, because their case was not presented properly. So I've seen someone who's a non-resident who has approached a bank which does not fund for non-residents. So the moment you would approach that bank, they would immediately decline you. They have come to us and we have been able to get them a loan in the next week, a pre-approval in the next week itself.
Okay.
From a different bank.
Yeah, to be honest, I'm not here to promote mortgage broker or promote Sudeep or anyone. I'm just here to tell you that for every step that you're taking, you have to speak or consult with the expert in that field. If you go to the bank, they have their own issue. You have your own goals. Real estate agent, they have their own goals. But when it comes to the mortgage, you can use mortgage broker expertise to get the most benefit out of the whole deal, whole process.
Absolutely. See, I'll explain in a very simple way. The moment you decide, so let's say when people get married and when they have a kid, right? The first thing that they look at is basically taking an insurance for themselves, and for taking an insurance for themselves because now they have a family, they would approach an insurance broker who would guide them in the right way. The moment you have extra money which you may have accumulated and you decide to invest this money, you would approach a certified wealth manager,
Okay.
who would guide you where this particular money should be invested. We do exactly the same thing. We are an independent, so I am not governed by any bank. I would give you an independent professional advice on the basis of your current financial profile, that which bank would suit you the best.
Okay. There is something that we were discussing before, if you remember, that age, health of the person that they are applying for a loan is really matter for the banks.
Yes.
Can you tell me that what other things, like you also explain about age and health, how they are affect the mortgage capacity, and then what other aspects of life might affect the mortgage capacity for the person who are applying for the mortgage?
The central bank regulation here states that the maximum amount of loan that can be given to an individual is for a maximum period of 25 years. Now,
Okay.
your age at maturity of the loan should be less than or equal to 65. So, which means if I'm 40, I will get a 25-year loan. But the moment I'm 45, I would only get a 20-year loan.
20 year.
The loan amount is also dependent not just on the age, but on your income as well. So, the more your income and the less your age, the maximum amount you can tap out from the loan.
Okay.
From the loan approval, rather, I would say. Your health plays a very, very important role because all loans in the UAE are secured via a life insurance. Now, if I'm obese, if I have certain pre-existing conditions, or let's say if I'm 55, 60, having pre-existing conditions of blood pressure, diabetes, or any of these things, my insurance cost goes up. The moment my insurance cost goes up, cost of taking a loan increases because, people generally don't calculate this when they look at their installments. They would purely look at the fact that I'm taking 1,000,000 dirhams of loan and let's say my installment will be 4,000 dirhams. But what they miss out on the fact is that, if they're 50 or 55 or if they have any pre-existing conditions, the insurance company might increase their insurance premium, which will also be a cost of your loan itself.
Oh, okay. And they have to pay by
They
a
have to pay.
monthly basis.
They have to pay on a month. So some banks look at it paying from a monthly basis. Some banks take it upfront per annum. So
Okay.
depending upon, again, bank to bank.
Rather than your income, your age, and your health also has a big impact
Absolutely.
on getting mortgage in UAE. You have
Yes.
to pay attention to that. We were talking about insurance. I think insurance also is one of those hidden costs that no one count on it. They don't know. They only think about the profit of the bank, the amount of the mortgage, and nothing else. They divide it. Tell me, what are those fees that they are applicable to the mortgage and they have to pay it on a monthly or yearly basis, and nobody counts on it?
So generally, people don't look at the fact the moment you are buying a property, you would end up paying 4% to Dubai Land Department.
Okay.
This is generally missed out.
This is only one time.
This is only one time.
One time, 4%.
You also end up paying about 2% to your real estate broker, which is
Okay.
also missed out. Now there are other bank costs which could be for valuation, which could be processing fees, which could be life insurance, property insurance, and your mortgage registration and deregistration charges. Now all these things are typically missed out. If you would individually decide to buy a property and take a loan, the moment you come to us, we would tell you this upfront that this is the cost of actually buying.
They have to know about it.
Buying a property.
Yeah.
There is an additional 8-9% of charges that you will have to account for when you're buying a property, and this has to be paid upfront. The Dubai Land Department fees, the real estate broker charges, the bank processing fee, the bank valuation fee has to be paid upfront, the mortgage registration charges upfront, the life insurance and property insurance is to be paid on an annual basis or on a monthly basis to the bank from where you're taking the funding. And when you finish off your loan, there is another charge, which is the mortgage deregistration fees.
After, let's say, 10 years, 20
After
years,
10
or
years,
whatever.
20 years, or 25 years, whenever you have basically finished off your loan, or if you sell your property, you end up paying the mortgage deregistration charge as well to release your property from the mortgage.
Is there any tax involved in this in between?
The only tax that you end up paying is, so there's no tax involved, it's VAT. The VAT is on the valuation fees. The VAT is on the trustee fees of 4,000 dirhams, which is again, not accounted for,
Okay.
which you end up paying. Apart from that, on the insurance, yes, there is VAT involved there as well. On the bank processing fee, there is VAT involved.
Okay.
So all of these fees are VAT.
Thank you so
with VAT.
much. Thank you so much. It's so clear. Do you want to wrap it up just one more time for the audience to know the exact costs?
So if you're buying a property of 100 dirhams,
Okay.
I always suggest to keep another 10% of that as variable fees, which could be your Dubai Land Department fees of 4%, your real estate brokerage fee of 2%, your bank processing fee of 0.5 to 1%,
Okay.
valuation fees, life insurance fees, property insurance fees for the first year, both of them for first year, and your mortgage registration charge, and not to forget the trustee fees of 4,200 dirhams.
10% extra you have to think about it to cover all those fees when you are getting mortgage from UAE's bank. Based on what's happening and what we have seen in Dubai over the past 20 years, do you think that banks going to pay attention more to the off-plan projects?
Yes, looking at the last 3 months, information that is coming out from the banks have started funding for off-plan projects. 8, 10 developers are already added to the list, and the list is increasing on a daily or a weekly basis. So as we move forward, we will have more funding available for off-plan purchases.
They introduced escrow account to Dubai real estate market, everything has changed. Developers, they have to reach to the certain level to be able to collect money from escrow accounts. And in between, anything happened to the developer and developer bankrupt or anything, the money is there, investors' funds are safe, and another developer will replace, the government will pick another developer, and construction will continue. So the process of the development is safe.
Absolutely. So
And
Dubai Land Department has made sure that the moment you end up buying a property, when you pay to a developer for an off-plan property, the money only goes to the escrow account.
Okay.
And escrow account can only be used for paying to the contractor for the completion of the property that you have bought. It cannot be used for anything else. In the event if a developer goes bankrupt, Dubai Land Department steps in.
Okay.
Your money is protected in the escrow, and depending upon whatever is the legal process, they would appoint another developer who could then end up completing the project.
So because the process is so clear
Absolutely.
that we are expecting more developers added to the list of the bank for the
Yes.
off-plan
So
projects.
what is happening is the moment now a developer launches a project, if the bank, if they approach the bank and if the bank is able to complete their due diligence early, they might end up adding the developer in the list or that particular project in the list of off-plan properties. I mean the approved off-plan properties,
Okay.
thereby enhancing the market for funding for off-plan properties.
You are in a finance world. What do you think that they have to improve in finance market in UAE that you wish for, that you think that, okay, if they do this, it's going to be better?
My personal opinion would be that, I personally believe that the central bank should look at, because the market is completely regulated at this point of time, backed by cash buyers, more than 70% of that is cash buyers. Maybe, look at increasing the loan to values from 80% to 90%. So we are, I mean, as the UAE is moving from a developed market to a developing market to a developed market, when I look at the West, the loan to values are as high as 90% or 95%. We probably can also have that right now. The investors are much more educated at this point of time than what it was 20 years back. Because Dubai had just started, or the UAE had just started the freehold properties thing in 2002 or 2005. And everyone was just buying properties at that point of time. Right now, it's much more regulated. The laws are there, the escrow accounts are there, the developers know how to basically make sure that properties are sold the right way. So I personally believe that it is the right time of increasing the loan to values from 80 to maybe 85 and then gradually to 90%.
Okay, in between, let's say some clients, they came to you, they got the loan, and now something happened. Because of the circumstance, they cannot go ahead to pay the mortgage. How can you help them? Is it possible to get more time for them or refinance them? How you can help them?
The best advice that I give them is approaching the bank with them from where the funding has been taken and informing the bank of their current situation today itself. So let's say I might have taken a loan and my outstanding is there for the next 10 years, but I've lost my job at this point of time.
Yes.
Approach, and I know for a fact that I cannot pay my next month or the next 6 months installments. Approach the bank today itself, inform them of your current situation, and they will be able to help you out. I mean, we can only approach, the last decision basically is from the bank, from where the funding has been taken.
So it means it's possible.
It is
You can
possible,
help
very
them, yeah?
much, very much.
Refinance. They call
Everyone
it
understand.
refinancing.
They
This is
call it.
refinancing or means
It is not refinancing. It is just helping out. I mean, so even right now, as we speak, or during COVID times, central bank had launched different projects wherein people who were unable to make payments for the next 6 months, their installments were deferred and were taken at a later stage. When their jobs or when their incomes had started again. So
okay.
it's very much possible, but the ultimate decision rests on the bank from where the funding has been taken.
So, Sudeep, you said that you've been in Dubai for the past 30 years. And then
Yes.
in the finance world,
In the finance world for the last 20 years and
20 years.
running my own setup for the last 10 years.
Tell me what lessons you learned from the challenges and the crisis happened in Dubai, and what Dubai learns in the finance world. What Dubai learned from the previous crisis in 2008 and then COVID and the current one? What has been
So
changed?
Dubai market was highly speculative rather in 2008. It has gone from the speculation to a proper risk balanced approach. That's number one. What has also happened is the land department, the government has increased the fees, the transfer fees, the transfer charges to 4%, which used to be 2% and then 0.5% at some point of time.
Yeah, that was like the flipping happened
Yes.
all the
So
time
so
in
people
Dubai.
used to just end up buying a property. So I have seen people, or I've heard people rather, when I just started my career, that they have 50,000 dirhams. They have gone to Nakhil. They have ended up buying a property for 5 million
Yes.
dirhams.
Yeah,
Came out and flipped it, to someone else with a
exactly.
profit of 100,000 dirhams on their equity of 50,000 dirhams. Now,
That's what.
something which I did not understand how at that point of time, but was purely because of the fact that the transfer charges were as less as 0.5%. Now that has been increased to 4% right now. So that has basically stopped the speculative selling in the market. It has been restricted to this fact that the short-term speculation has stopped. The strict loan to values, the strict debt burden ratios
Yeah.
are making sure that the market holds on to what it is right now, which is completely regulated. The market currently is basically built on real demand right now rather than speculation.
Okay.
So yeah, that's what I believe.
You are working with loads of investors. What opportunities real and smart investors they will see right now in Dubai market?
The biggest opportunity that I believe someone should look at from outside the UAE is the return that a property in the UAE can generate.
Okay.
I mean, I have not seen anywhere in the world, getting returns higher than 5, 6, 7% on residential properties. UAE or Dubai is the only place wherein these kind of returns happen. And because your borrowing rates are as low as 4 or 5%, and if you end up getting a 7 or an 8% or a 9% on your property, please take a loan and earn the arbitrage in between, and thereby increasing the amount of return on your capital,
Okay.
or on your equity that you've invested across.
Okay. These are the things that investors they do right now in the
they
market.
they they do right now. I mean, this is the best way of growing your equity, because the moment you start borrowing at a lower cost and earning a higher return on that cost, uh, your capital basically appreciates more. Your capital generates more return.
Okay, this is one way, and the other way is just to like mortgaging your property to
Mortgage.
expand your portfolio to buying another
Absolutely, absolutely.
properties.
I mean, if your circumstances permit you to
Yeah.
mortgage your property at 4-5%, invest this money into an off-plan property where your capital appreciates, or invest this into the secondary market wherein you're able to generate a higher return, thereby paying a lesser amount to your existing bank from where you have taken a loan, and thereby earning in between.
This is where exactly smart investors they see the opportunities that they really
Yes.
see in the market and they jump into the opportunity and Okay, they definitely get they create a great wealth and great portfolio for themselves. Yeah.
Correct.
Before I go to the last question, I just ask you this question: that is it difference between buying property in Dubai or Abu Dhabi? The rules and regulation are different, or no? It's
The approach from the banks are the same. However, the cost could vary depending upon the similar to whatever the Abu Dhabi transfer charges could be. But
okay.
the approach from a bank is the same.
It's the same.
Is the same. Absolutely.
But it doesn't matter if you buy property in Dubai or Abu Dhabi. The rules and regulation
The
from the
rules and
bank are the
regulations are
same.
the same. We would look at your financial profile in the same way, whether you're buying a property in Dubai, Abu Dhabi, Ras Al Khaimah, Sharjah,
Oh, okay. So Sharjah, Ras Al
any
Khaimah
of these
also.
places where freehold properties can be bought. We would look at your financial profile in the same way.
Okay, wonderful.
The charges could be different depending upon the emirate to emirate, but otherwise everything else remains the same.
Okay, let's go to the last question. I just want to ask you if there is any golden advice as a finance broker you can give to someone who wants to buy property or invest in Dubai. It doesn't matter if they are a first-time property buyer or investor or anyone. What is that golden advice that you will give to everyone?
Approach a financing broker, may not be me, could be anyone in Dubai. Approach them because they would give you access to 20 different banks, which you may not have. Start early, start preparing yourself as early as possible. I mean, even if you want to borrow after 2 years from now, you can always start working on your financial profile and your bank statements today itself. Start saving and start investing because investment is the only way of getting rich. There is no other way out.
Thank you so much. Thank you so much, Sudeep, for sharing your expertise with us and
Thank you.
let my audience who knows more about mortgage and finance world in UAE. Make sure that you invest wisely and stay knowledgeable. Thank you so much for watching us. If you find any value in this episode, feel free to share it with your friends, families, or anyone who is interested to buy property in Dubai. Thank you.